Last night, while most of the world was sleeping, one single speech sent shockwaves across the global financial markets. American stocks starting falling, Asian markets turned red, gold prices jumped, the dollar became stronger, and investors everywhere began asking just one question: is the trade war coming back? Because if it is, this is not just a story about America and China. This is a story about your money, your investments, and the future of the global economy. In today's video, I will explain what a trade war really is, what exactly Donald Trump said, why China's response is extremely dangerous, what this means for global markets, and which countries and sectors could become the biggest winners. And make sure you watch till the end because in the final part, I will share something that 90% of investors are completely ignoring. First, what is a trade war? Let's start with the basics. What exactly is a trade war? Normally, when one country imports goods from another, there is a simple import tax. But in a trade war, countries deliberately impose very heavy tariffs and restrictions to make foreign products more expensive and protect their own industries. The problem is when one country raises tariffs, the other country retaliates, and that's when the real damage begins. Exports slow down, costs increase, company profit fall, inflation rises, and economic growth weakness. We have already seen this movie before between 2018 and 2019. During Trump's first presidency, the United States imposed tariffs on more than $300 billion worth of Chinese goods. The result: global trade slowed, technology companies suffered, supply chains broke, and stock markets become extremely volatile. Now in 2026, this story may be returning. Second one, Trump's speech that shook market. In this recent speech, Donald Trump said something very simple but extremely powerful. He said America must stop depending on China. We will impose new tariffs on Chinese imports, and American companies must bring manufacturing back home. The moment Wall Street heard these words, everyone understood one thing: trouble is coming. Because today, iPhones are assembled in China, Tesla batteries come from China, semiconductor supply chains depend on China, even defense electronics rely on Chinese materials. If tariffs rise, costs will rise, profits will fall, consumer price will increase, and growth will slow. And market hate just one thing more than bad news: uncertainty. Third one, how market reacted. Within minutes of the speech, US futures turned red. Technology stocks started selling off. Hedge funds began reducing exposure. Investors suddenly remembered one word: recession. Because trade war do not just hurt companies, they hurt entire economies. So what did investors do? They rushed into gold. They bought government bonds. They reduced the exposure to risky assets. They become defense. This is what financial market call flight to safety. Whenever fear enters the system, money always moves to protection first. Fourth one, China's most dangerous weapon. Now comes the most important and dangerous part: China's response. Officially, China said, we will not bow to pressure. If tariffs rise, we will respond proportionally. But behind the scenes, China holds a weapon that could shake the entire global economy: rare earth materials. These materials are essential for artificial intelligence chips, electric vehicle batteries, military equipment, satellites, advanced weapon system, and today more than 70% of the world's supply is controlled by China. This means if China restricted exports, chip production slows, EV manufacturing collapse, defense supply chain break, technology progress stalls, and at the moment this stop being a trade problem and becomes a national security crisis. This is no longer just economics, this is a battle for technological dominance and global power. 5. Who benefits from this crisis? Now let's talk about the opportunity because every crisis creates winners, and in this trade war, some countries may benefit enormously. The world has already learned one lesson: depending only on China is dangerous. That is why global companies are now following one strategy: China plus one, meaning keep China, but add one more major manufacturing base, and the strongest candidate today is India. Why? Massive labor force, fast growing domestic market, government manufacturing incentives, political stability, strong relation with the West already. Apple is expanding production in India. Samsung is building its largest factories there. Defense manufacturing is shifting. Semiconductor investment are being planned. If the trade war intensifies, foreign investments into India could explode. Manufacturing could boom. Employment could rise, and India could become the next global supply hub. Next one, what should investors do? Now the critical question, what should investors do in this environment? First, understand one thing clearly. In the short term, volatility will increase. Market will react sharply to news. Panic selling will happen, but in the long term, this transformation creates massive opportunities. Potential winners, manufacturing companies, electronics and semiconductor supply chains, defense industries, infrastructure and capital goods, emerging market exporters, potential losers, export heavy technology firms, China dependent supply chains, commodity sensitive sectors. The biggest mistake investors make is reacting emotionally to headlines. Smart money does not fear volatility, smart money uses volatility. The biggest lesson from today's story is simple. Markets are not driven only by numbers. Sometimes they are driven by history, by politics, by power. Trump versus China is not just a political conflict, it is a blueprint for how the global economy will look over the next decade. Those who understand this shift early will not just survive the volatility, they will profit from it, and those who ignore it will panic at the worst possible moment and pay the price. Now, I want to ask you, do you believe this trade war will push the world towards recession, or will it create a new economic order with new global winners? Let me know your thought in the comments. If you found this analysis valuable, hit the like button, share it with fellow investors, and subscribe to the channel because here we don't just report the news, we decode the future.